Hey all, welcome to ShareTreck. Today is the 6th of May 2022 and we already had quite a few of Q1 results, earnings, and I thought let's take stock of all of them as we are heading into the weekend. So this is an additional video for today. I'll be very quick about it, and already the earnings transcripts are available for you to check out at the website in the investors section of each of these companies. But I have taken out all the key points together and also put the table together to show what was the expectation, what was the results. With that said, let's get started. So let's start looking at the earnings versus actual comparison. This table shows you with a red highlight in those cells where expectations have not been met, and green in those cells where the expectations have been exceeded. So if we look at PACB, their EPS has come in at least 5 cents worse than expected. We expected a negative 32 and we got negative 37. And in case of revenue, there has been good outperformance by PACB. And in my opinion, I would give more weightage to the revenue exceeding the expectations than the EPS coming slightly worse than expected, because this company is expanding. And as you will see in subsequent slides where I dwell down into details of the earnings, that PACB has done great work in Q1. And the market should reward it instead of penalizing it. That's my personal opinion. Again, let's look at REGN, which has exceeded on both the EPS as well as revenue department. Editas likewise has exceeded on the revenue department and came in at slightly less EPS per share as compared to the expectation of minus 78 cents. They delivered minus 74 cents, just 4 cents superior to what was expected. Vertex unfortunately marginally missed the EPS, but they did pretty okay on revenue expectations, almost on target, slightly higher. ILMN has done very well on EPS, but they came down below expectations on revenue. Now we'll take a deeper look into each of these companies. Okay, let's start drilling down into the Q1 report for each of them. Let's start with PACB. With PACB, we have a revenue of 33.2 million. Which is a 14% increase over the same period last year. Very happy about that. They delivered a record of 50 SQL 2 and 2E systems during the quarter compared to 41 placed in the prior year same quarter. So this is an increase of 9 on a base of 41. You can imagine it's a significant increase, and I'm really happy with that kind of progress. Another reason why I'm very happy is that the installed base of 424 SQL 2 systems as of March 31, 2022 is almost twice as much as it was in the same quarter last year. So that's a big increase, and a great source of happiness is because the increased install base is going to give 2 revenue streams that will be consistently increasing, as you will see when we go ahead. Instrument revenue of 15.6 million as compared to 14.9 million the previous year is also a very good increase. Consumable revenue of 12.7 million compared with 10.4 million in the prior year. That's almost 1.3 million increase. So this is significant. It's a pretty high increase. Actually, it comes to 2.3 million. That's the increase. A very healthy increase in consumable revenue. And the consumable revenue is increasing because the installed base is increasing, and all those clients are using the machines, and they want more cartridges, they want more reagents. All those things are being supplied by PACB, and that's why that's happening. So this is a very, very good revenue stream that's going to be consistently increasing, and it will underpin the revenues for PACB every year. Service and other revenue of 4.9 million compared to 3.7 million. This is an increase of almost 1.2 million as compared to same quarter the previous year. Again, service and other revenue is proportional to the amount of installed base of machines. So as the installed base keeps on going up, these revenues will go up. And as we can see, the installed base is going up very rapidly. 9 additional machines installed in this quarter as compared to the same quarter last year. That's a significant improvement. So overall, I'm very happy with PACB. And the management has said that they don't need to raise capital till positive cash flow comes in. And that gives me a good deal of happiness. But it is offset by the fact that 20.9 million in stock-based compensation which was given during this quarter, Q1 2022, is twice as much as what was done in Q1 2021. That gives me a bit of concern. Also, operating expenses total 91.7 million, which is almost double of what happened in Q1 2022, which was in the range of 42 million, something in that area. So that's a matter of concern. However, gross profit is showing a 9% increase at 14.2 million. Very happy about that. Gross margin is marginally down by 2% for Q1 2022 as compared to Q1 2021. That I'm not too much worried about. It's a gross margin. Things may fluctuate a little bit here and there. We have to see the long-term trends, how it goes. But net loss narrowed marginally by 6 to 7%. That's something that I'm happy about, because 6 to 7% reduction in net loss is a significant deal. Now let's look at Editas. They've had a good quarter. They dosed their first pediatric patient in phase 1 or 2 studies while evaluating EDIT 101 for treatment of blindness due to LCA10. We are expecting an update in the second half of 2022. So as the market, as I said, the market is going to keep on consolidating and being volatile until the third quarter, and then it will pick up around the fourth quarter or end of third quarter. So around that time, I think Editas will get a boost if we get good results for LCA10, EDIT 101 in the second half of 2022. Recently, FDA granted rare pediatric disease designation to EDIT 301 as an investigational gene-edited medicine for the treatment of TDT. Dosing in this study is expected to begin later this year. They haven't mentioned when. So when they say later this year without mentioning when, I would expect that it will happen probably in the third quarter. So I wouldn't expect much to come out of that right now. EDIT 103 preclinical data released today shows encouraging results without any off-base visit. This is absolutely hot off the press. I haven't been able to read the entire article. There are a lot of technical specifications. As I'm not a doctor or a biologist or a professional in genetics, I need to refer to other people and then make sense out of it, and those kind of interpretations are not yet available. So we'll have to wait a little bit. If any of the viewers know what this is, please put it in the comment and let us all understand what's happening. But I feel that the results are quite encouraging based on whatever I saw. The fact that off-base edits were not observed, that was a very big relief for me. Going further, for Editas, as of September 30, 2020, the company had raised 648.7 million in net proceeds through sale of shares of its common stock in public offering, and that forms the corpus of the cash for the company. Cash and cash equivalents and marketable securities as of March 31, 2022 were 566.4 million. And the company says it can fund its operating expenses and capital expenditure into early 2024. In my earlier analysis, I thought that they would have to raise capital in 2023, but now they are saying they can go all the way up to early 2024, which I assume the best stretch would be maybe up to April 2024. Still, that's better than going to the market in 2023, because by early 2024, I think they would have something or the other going very close to BLA. Collaboration and other research and development revenues were 6.8 million for the 3 months ended March 31, 2022, as compared to 6.5 million for the same period in 2021. This is again a marginal increase. I wish it was more, but it is what it is, and it's still positive. So I'm quite happy about it. And going further, other things that make me further comfortable with Editas is that the R&D expenses have been moderated, and they came in 10% lower than before, and they are right now at 38 million. So there is a bit of control going on in R&D expenses. Maybe they're optimizing R&D expenses by doing whatever they can to make sure there is economies in operation. General and administrative expenses have decreased 9% and as compared to earlier, and they came in at 19.5 million. These two things are making me a bit more comfortable that the money can definitely go further ahead. I think the management is keenly aware of the cash burn, and they are trying to rein it in and make sure that the cash runway goes longer. So that's very good for Editas. So overall, I'm in a much better state of mind with regard to Editas than I was before when I did the special on Editas. Now going on to Regeneron, the first quarter 2022 revenues increased by 17%, and they came in at 2.97 billion. So this is a significant increase. And what they are saying here is that if they remove COVID data from the previous year and compare, then the revenues have increased by 25%. What that basically means is that 17% increase as against the 25% is basically because they don't have as much COVID revenues as they had before. But I think that this is going to be the case for many other pharma companies which are doing a lot of business during COVID. So overall, when you look at everybody else, I don't think it's going to be a very big factor in valuation, because the other companies are also having similar problems. It's not like Regeneron is the only one which is seeing decreasing COVID revenues. First quarter 2022, ILMN US sale, net sales increased 13% to 1.52 billion. So that's a significant increase, 13% increase in sale. First quarter 2022, Dupixent, these are all their greatest hits. Sales increased by 43%. So Dupixent is doing extremely well. It has bought in an additional $1.81 billion. Dupixent approved in EU for children aged 6 to 11 with severe asthma. FDA priority review granted for atopic dermatitis in children aged 6 months to 5 years. And so these are all the extra achievements for Regeneron, which are going to give results in the subsequent quarters. So all in all, a good quarter for Regeneron. In April 2022, the company entered into a definitive merger agreement to acquire Checkmate Pharmaceuticals Inc., a total equity value of approximately $250 million. And Checkmate Pharmaceuticals is a clinical stage biotech company. And each Checkmate shareholder will get $10.5 per share for each share that they hold. And as of today, just when I was making this video, which is 6th of May, the share price of Checkmate was at 10.37. So it's a very, very marginal premium out here. The Checkmate company will become part of their cell biology division and strengthen them up. So overall, I think Regeneron has done well in this quarter. Vertex announced that it has completed enrollment and dosed greater than 75 patients in CTX001 studies. So this information is applicable for us for CRISPR Therapeutics as well, because CRISPR and Vertex are jointly doing the CTX001 for sickle cell disease. Phase 3 studies initiated for VX121 and VX561 with more than 180 sites open and enrolling. And they have achieved positive proof of concept for VX147 phase 2 study. And they have achieved positive proof of concept for VX548 as well as VX880. However, in case of VX880, which is used for treatment of type 1 diabetes, the FDA has put them on a hold. Vertex said they were very surprised that they have been put on a hold, but they will have a discussion with FDA and give them whatever is needed. So we'll have to watch that space going forward. That's where we are at with regard to Vertex. When it comes to Illumina had a revenue of 1.22 billion, which is up 12% from same time previous quarter. Excellent growth out there. EPS came in at 55 cents as compared to $1 for Q1 2022. That's where we have had a bit of a problem with regard to Illumina. Non-GAAP adjusted EPS of 1.07 compared to 1.89 for same quarter last year. Again, it's not anything great to write home about. In fact, it's a matter of concern that the EPS gone down, and Illumina has been punished in the market for that. They have reiterated full year guidance of 14 to 16% growth as compared to fiscal year 2021. So that's a good positive statement of confidence from the management. They expect diluted EPS of 2.33 to 2.53 for the fiscal year 2022. So that's the projection that the management has made. And they are reiterating non-GAAP diluted EPS guidance of $4 to $4.2 for fiscal year 2022. And that's what we have from Illumina. And they reported that they have a total order backlog from the quarter, and they exited the quarter with a record total backlog. Now, the way I look at this is one way you can say is that, oh, they have booked so much more orders than they can fulfill. So it's a great situation. But when I look at PACB, they are working on delivering within the same quarter, and they don't have an order backlog. So there is a good chance that PACB will be trying to get greater market share, and it will be easier for them because Illumina, even though it has got a whole range of products and they're at the absolute edge, they have not been able to fulfill the market demand. So there will be clients who will be willing to go for PACB if it suits their requirements. That's my thoughts. Any of the viewers who are very familiar with these markets, please put your comments. What you think about it. Do you agree with me, or do you have any other points of view? As I had mentioned in my earlier video on Illumina, they had acquired Grail. So Grail continued to gain traction with more than 30 partnerships with health systems, employers, and insurers. So this is going to be a positive revenue story for Illumina going forward. Now they have a whole bunch of partnership. So I've taken these things from their earnings report. So they have partnership with Deerfield Management to identify drug targets and accelerate novel therapy development using genomics and artificial intelligence. They have developed long-term strategic collaborations with Janssen Biotech to accelerate the development of precision medicines by leveraging Illumina's portfolio of next-generation sequencing solutions. So those are the two major collaborations that was highlighted in the earnings report, and both of them are significant. They launched TrueSight Oncology Comprehensive in Europe, a single test that assesses multiple tumor genes and biomarkers to reveal the specific molecular profile of a patient's cancer. This is again a very positive development for Illumina and can come up with a really good revenue stream. Invested in 7 omics startup companies through Illumina Accelerator Advancing Breakthrough. So for those who are not familiar with the term omics, it is just a common term used to mention all the possible companies that can be in the genomics sector, whether they are sequencing or whether they are synthesizing or whether they are editing or whether they're coming up with therapies. They're all omics. Therapeutics, diagnostic, DNA storage, mental wellness, and sustainable food applications are the focus of these omics companies that Illumina Accelerator is investing in. And that kind of brings me to an end of this presentation. And I would like to know what you think about the earnings season so far. What were your expectations? What were you looking forward to? And how did it turn up? And let me know if I have missed any significant point that could either be good or bad for any of the companies that we have seen before. Let us have some community interactions. As you know that I'm an average investor. It's just that I have this camera and I'm recording and I'm putting it out there. So I'm not any greater than you or any better than you. So many of you probably have more knowledge and experience than I do. Please do not be shy. Put your comments in the comment sections below. Finally, I would request you to put a like there in case you like the video. This helps YouTube to promote our channel and get more people to discover our channel. And I have one request for you. If you are not subscribed, please subscribe. Let us cross over to the 500 threshold. We are right now at 451. We just need 49 more subscribers, and then we get our community tab where we can have a lot of interactions, because genomics field is very complicated, and as a generic investor, it's very difficult to make sense. So we need a lot of market intelligence. We need to exchange ideas, and a community tab would be a suitable place where that can happen. So please subscribe, and I'll see you tomorrow with the Saturday edition, which is going to talk about CRISPR, VCTX 210, the ViaCyte collaboration. We are taking a deep dive into it. So make sure you check it out. It's dropping at 6 o'clock in the morning tomorrow. Thanks and have a great day. Bye for now.